Hey guys, all right, I have up the ticker on VLON. This is a 5-minute chart. I'm going to take a look at a few things. I want to spot the reversal here, and I want to see what makes this trade so great. So we know that we had this crazy run up in the morning. We spotted it really early in the morning, I think at $1.60, so somewhere in here, but it crossed this main level here. So these levels that I have on here are levels that I have marked personally that I've looked maybe on the weekly or the daily levels for a wider time frame, heavy weighted support and resistance. So that's what these lines are here. So that's all that they are. There's nothing fancy or special about them. It's just looking back and just visually marking maybe extreme volume on wicks or on the body of the candle or whatever. So I'm looking for rejections, but I'm also looking for support for possible bounce plays. So in this case, what we're looking at on VLON, this was a 5-minute chart. What you'll see I have up here, this is just a normal candlestick chart on TradingView. I have the RSI here. This is a 5-minute chart, so this is a 5-minute RSI. And what you'll see here is that we dipped down below the oversold. See, naturally the RSI is going to be oversold anything under 30. I have mine set to 25. So this dotted line that you see here at the bottom of the RSI is 25. So we can see that we dipped below that line here. And that to me is technically oversold. But there's also a way to find out historically how oversold this stock likes to get. So what I would do is I would just double click on the RSI or the oscillator and just blow that up, and I would just zoom out. And when I zoom out, go ahead and scroll that down, and you can see historically where it likes to dip down to and then bounce back. And this is on strictly a 5-minute RSI, and this is, I believe, on a 7-minute time frame. Let's see if I have that right. Yes, this is, a 7-day time frame, excuse me. So this is on a 7-day close time frame. You can see here that's the settings I have on here, and it's again a 5-minute RSI. So nothing fancy here, just really zoomed out as far as I could and just mark an obvious line that basically if it hits this line, send me the alert, send my Discord the alert, and that's for us to basically see a possible scalp out of this and sometimes even a reversal. So it's just one indicator that I like to keep track of. But naturally, a lot of people would look at it being at 30, which is all the way right here, right around here. So if I marked a line there, that would be where most people look at it as oversold. And what we see here is it dipped down below that 30 plenty of times. Historically, it likes to dip a lot lower than that and closer down to this. This line I have marked here is around 13. So it's 12.95, so 13. So most people are looking at under 30 as oversold, and they say, oh, this is oversold. Maybe I should buy this thing now. Well, the problem is that on my chart, or historically on its own chart, zooming out, you can see it wasn't oversold. But that's for another video. But anyway, I'll delete that line off of there. Again, so I made my area of value or my RSI alert. So if it were to dip and touch this line, I would get an alert. So we did dip below the natural 25 and below is where I start to watch. And we did dip close. But as you can see here, we got to about 15. So we didn't actually touch that alert. So I didn't get that alert on this stock. But what's interesting about this is it dipped close to that line. So it dipped real close to that alert, which would have sent the alert out to me personally on my phone, on my email, just to alert me and say, hey, jump on the computer. This might be an area you want to value that you have marked. And then at the same time, it would also, I have a bot in my Discord that would send them the alert as well, letting them know, hey guys, this is a visually place on the chart visually that I added value to. So we can see that we did not touch this RSI alert. So the group did not get an RSI alert on this stock. But what we can see is that it did touch this white line going across. And this white line is one of those support and resistance lines that I had marked. So it dipped down and it tested that level. And as we can see, it had a pretty nasty sell-off down below the purple 9 EMA, and the yellow is 20 EMA. So we were down below that and basically oversold. So we entered oversold on the RSI, but we were also testing on a support area. So we know we had a test, a support area of 176, which is our next support area here. And we knew we had a support area around 189. So there's a few strategies you can go about this. You can start making your entry around this line using an arbitrary stop loss, somewhere where you're comfortable down here below that. You can use maybe an ATR value to use your stop loss. That would set it down here on a number of pips. You could set maybe just below this next level, or maybe even on this next level as your stop loss. Or you could look at this as maybe even a zone, and maybe you're purchasing and acquiring shares in the zone as a starter position, and you're just adding in the zone and hoping that it breaks out. And if it doesn't break out and we drop down here, then it's good because we have a set plan and area of value. That way we can set our stop loss at a comfortable level. So that's what's great about these trades. But with this one, what was really special is we not only tested that level of support, and we actually had a bullish engulfing candle here. Right here, it wasn't engulfing the candle before, but we did have a bullish candle here. And we had a bullish engulfing candle right here. So maybe not entering here, but maybe this candle here, once it broke and closed, maybe that was the entry. Maybe you're entering right at the top of that candle, so you're looking at a $2 entry. And again, it's a really nice spot to enter, because if you're entering at a $2 entry and you know you have a 189 level of support, then it's easy to maybe say, okay, well, I'll put a 20-cent stop loss on it at $1.80. So again, it just helps you strategize and have a plan while trading, in which I always advocate. I'm a big advocate of trade with a plan. It's very important to trade with a plan. You don't want to wing it on these things. You want to have a plan. So the plan here would be, okay, we have a support area here, an area of value. So in this area is our area of value, and it did test in that support area. We did get the alert sent to the Discord, sent to my email and to my phone. So there was an alert on this one saying, hey, maybe it's worth watching. This is a support area. Take a look at the candlesticks at this area. And then we also can see down here, we tested an area of value on the RSI oscillator. So this was the lowest that the oscillator went to that day, which was the last day of trading, which was Friday. So what we can see is it tested down here. It came into an area of value here, an area of value here. We had a bullish engulfing candle here that fully engulfed this previous red candle. And again, this is on a 5-minute chart, right at our support level. So it gives us a good idea of possible indication that this could reverse. Now, if you were to get this on the line, which is the exact right entry, and then sell it at the top, which nobody did, you're looking at a 28% trade, which is great, but we're not looking for that. We're looking for a scalp, a sliver, or just a piece of the pie. So maybe we're going to sell into some of this profit. So maybe we waited for this bullish engulfing candle. We then made our entry here. And then once we got up to this pressure here, we took a little bit off the top. So it's only a 3.5% gain, but it's a quick, within minutes, within 2 minutes after, or I'm sorry, these are 5 minutes. So within 10 minutes after, we're shaving our position down a little bit. So then it came down here and actually tested our entry. And we could have either added to our position again after we already shaved into some profits, or we could just choose to let our position ride, again, using the stop loss down here. So it then returned to that line, broke through. Again, if you notice here, another bullish engulfing candle. So a bullish engulfing candle off of support, then a bullish engulfing candle breaking through resistance. So this is really important. So then it came back down, tested, broke back through, and this right here where it tested again, this is a great play because you could see it held the level. Once it held that level, that was an indication that we were going to make new highs. So you can see here, if you made an entry here, went to the highs here, you're looking at roughly about 14% on a trade there. So you can see how there's multiple opportunities within this area of value. But what's important is finding that area of value to begin with. It's real hard to focus when there's so many stocks and so many things going off. And even this one here, this one typically I don't trade later into the day. And as you can see, this one here is 11:45, 11:50, 11:55, 12 o'clock. So this was midday. This was at 12 o'clock, right around lunchtime is when this was happening. Often I'm already done and gone with my trading. And in this one, in this case, I made most of my trades right here in the bulk of the first initial move. I was using the 9 EMA pullback. So if you go to a 1 minute chart, which I'll show you after, but same thing. I made the bulk of my trading and my gains here in the beginning of the day. So I then turn into profit protection mode, and the rest of the day I'm looking for really high conviction setups. So this one here where it came down, tested the level, maybe that was a good one where you could put an arbitrary stop loss down here, and then it pops up and you get yourself a little scalp out of it. But I do believe that this one made such a strong move in the pre-market that it was due for a healthy and strong pullback. Now, it did pop up in the beginning of the day and hit a high of around 260, 265. And then it just tapered all the way back down from the 265 high, and you can see double wicks here. This one again on a 5 minute chart. So it's almost too obvious here because you have just these tweezer tops or these double wicks here, just a good sign, healthy sign of rejection. So we then saw it retrace down, and we're just looking for opportunities here. So we knew we had an area of value here. And again, these lines are just made with heavier weighted time frames, the weekly and the daily time frames. And I just marked levels that are really obvious that other traders will see as well. And it looks like they're holding a lot of weight. Maybe there was a lot of volume, or the candle was large in general. So we came back down here. We crushed down through that purple 9 EMA, passed down below that 20 EMA, and we knew that there was problems. See, we had a close here below the 20 EMA, and we just knew that there was problems here. We did have a little scalp bounce off of here, but I'm guessing that was more so because there was a support area here, and a lot of traders saw that. So it was just algorithms just buying off support with a possible stop loss. Again, trading with a strategy, with a plan set in stone, and then getting themselves a scalp. So just even on that scalp there, buying on that line or that support area and then selling at the top there, you're making with all these wicks here, you're making 11% on that trade. So that's a really great trade. Again, within 5, 10, 15 minutes, you're out of these trades within 20 minutes, 30 minutes tops. You're making 11%, 5 to 11%. That's a pretty healthy return in that time frame, in my opinion. So you can see why there was an area of value for a scalp there. It would try to test it here again. And it got back up, but this green line here is VWAP, and it just could never break that VWAP. So you could tell that there was obviously resistance at the VWAP. And you can see that here because we had so many wicks. So again, this is a telling tale right here. We have all these topping tails. We can tell there's a lot of rejection right here. So we could see there was a descending resistance here. So you knew that there was something going on. So I put in the Discord, guys. I put a few alerts. Keep eyes out for this. Keep your ear out. If you hear anything, then take a look at it. And sure enough, this is the alert we got. So you can see right here is these little green arrows are just an indicator that I built for my Discord, that they basically just tell me where the RSI is then becoming oversold. So they're not buy signals or sell signals. They just are supposed to help me visually identify where it's oversold and where it's overbought. So you can see here it's starting to become overbought, but did it care? No, it didn't. Continue to rise up because on a small float with news and volume, and again, there was nothing going on Friday morning pre-market. So the market was just hungry and just waiting for opportunity. And as soon as the opportunity hit, we all jumped on it, and it just squeezed up from there. So we came over here, and this is our trade plan. Came back down, made our trades in here, and that's fine. We'll go over that in a second. But right here on the 5-minute chart, we had our bullish engulfing candle here. So we have a price action indication here of possible reversal. We had our right here, we could see that we had the RSI. This is another thing here. I mean, if you look at it here, this is the RSI at its lowest point of the day, right here. And what we can see, and let me show you here. There we go. I'll make this a little bit bigger. What we can see here is we had our RSI touch down here, and we hit our lows, but we had our RSI at the lowest here and hit the lows, and then returned back up. So right here, we tested our lows again, or came close to testing lows, and you can see that the RSI was no longer testing those lows. So this was an RSI divergence. This is an example of RSI divergence, but this in combination, just being in an area of value, and then having the price action confirm an indication of reversal or scalp bounce, as I like to call them, was a nice little trade on this one. Again, it's tough because, you know, I tell my group all the time, you know, luck is when opportunity, or luck is when preparation meets opportunity, right? So in this case right here, this is being prepared at the right opportunity. So unfortunately, the opportunity came around lunchtime, around 12. So myself, I wasn't on the computer anymore. I had already made my trades. And so the opportunity was no longer there for myself. I was no longer available during that opportunity. But if you're on the computer, you're on the charts, and you see something like this happen, you can see the area of value you have marked here visually. You can see an area of value here on the RSI. And again, you just double click on the RSI, zoom out, and then you can see just little areas. You can see where the wicks or the price action likes to come down to, or the line on the oscillator. And you can see the RSI where it likes to dip to historically. So most people would say all the way up here at 30 is oversold. Well, historically, you can tell that this stock here actually is oversold more so from 17, 16 and under. So just keep that in mind when you're looking at the RSI and oversold plays as well. These lines here just support resistance on heavier weighted time frames. Let's take a look real quick at the 1 minute time frame. And we'll take a look at when the news came out to see if there was any opportunity there. So this is where, again, where I made the bulk of my trading. And these right here are my favorite plays. And what they are the 9 EMA pullback after news. So what we had here, you can see we had this huge, you know, bullish action right here. We had this huge spike up, a little retrace, spike up, come back down, retrace, and then spike back up at open. We had those double tops, tweezer tops, and that was it. So, and if you look back at this, you know, even looking at a 1 minute chart, you still even had the tweezer top. So a 1 minute chart showed you that, a 5 minute chart showed you that. So it was an obvious sign of possible rejection. Now, I would also say that putting a line, or like I have here, this is a resistance line. This is another alert. This is a really bullish indicator. If it were to break these highs, I want to know that because, and as soon as possible, because that's a really bullish move for this stock in the price action. So if it can break these highs and hold that level, shorts are going to get squeezed and this stock's going to go flying through the roof. So keep that in mind. But what we can see here on the 1 minute time frame, I'm going to zoom in here and look at the beginning of the day and how it happened, what happened exactly. And what you're seeing here on my chart, and let me get the VWAP off of here for now, because I'm just going to focus on the 9 EMA. I'm just going to focus on the EMA as exponential moving average. So this is a really simple strategy. A lot of people use this. This is a very obvious strategy, but it's simple yet very effective. And keep in mind, there's no strategy that's going to work 100% of the time. It just has to work more than 50% of the time for you to make profits. And the thing is when it does work, you could possibly make a really huge gain in a short period of time. And when it doesn't work, then we are always trading with a plan. So we always have a stop level in place. So we'll cut the loss, whether if it goes south and we were completely wrong, which happens to me, you know, sometimes. When I'm wrong, I cut the loss where I have planned to cut the loss. I move on, and maybe I play that stock again later when the setup is in my favor. So what we can see here is we had news. So at 8 a.m. we had news. And we had then volume to slowly come in behind it. So it wasn't all at once, but we had a very bullish candle here with 84. There's a volume up here as I scroll over these candles. 85,000 shares were traded on this candle, excuse me. So this is a 1 minute candle. So we had all this volume come in within a few minutes. So this is where I'm going to start looking for entries. So as we can see here, we then spiked up, kind of came back down, made new highs, came back down, tested this area. So this green area is the area of value. So anything in this area of value or around this purple line is where I like to start making my entries. So I might just, you know, go all in at once thinking I got to get in this stock. Maybe on this one right here, you can see this is a bullish engulfing candle, fully engulfing this previous candle on a support line. and on the 9 EMA. So this is a really important level. And you can see here we're also around the 150, which is the psychological $half support and resistance. So breaking that level, getting up to this 158 and then holding, this is a very bullish move. So this was a really good indication that there was possibly more highs to be had on this stock. So what we can see here is we broke this level, tested, broke, tested, and then broke through. And then we had new levels that were on higher time frames that we were going to look for resistance after that. You can see here we just completely blew through the first few resistances and came back down and then tested as a support. Then it offered off of that. We were again on support on the purple 9 EMA, which is another sign of support. And then we broke the high of this candle here, so maybe an entry here, and then it just continued. And then what happened here is we were meeting resistance. But then we came back down, test, but we never broke this yellow line. And see, when I enter on this purple line, which is the 9 EMA, oftentimes I'll use this yellow 20 EMA as my stop loss area or level. So it doesn't mean that as soon as it hits this line, I'm out of my position. Often what it means is when it closes below this line is when I start to exit or try to look for an exit out of my position. So, and that's where I really think it's a bearish move or bearish trend. So I prefer it to be trending over both the 9 EMA and the 20 EMA. There's oftentimes, there's exceptions to the rule. There's oftentimes where the stock won't be bouncing off of the 9 EMA. It will cross actually just below the yellow 20 EMA. And then in which case, if I see that that's happening and it's responding more so to the 20 EMA, then I'll use that 20 EMA as my entry, then using the 50 EMA, which is the red line following behind it, as my stop loss. Now, if it gets way too wide, like in here, and you can see this is, if I were to enter on the yellow line here and then use the red line here as my stop loss, it's a 15% stop loss and a 26-cent loss per share. Maybe that's too large for my strategy or my type of plays or trades. If that's the case, then I won't take that trade. So often it needs to be in a zone where it's not going to be too far away. Either that or I'm not going to use 50 EMA as my stop loss. I'll then decide to instead use maybe an arbitrary stop loss or a set stop loss of a level that I already have in my mind. So maybe I'll say, okay, well, I'm going to buy at this 20 EMA, but I'm only putting a 10-cent stop loss on it because that's what I'm comfortable with losing here. And then if it loses, it loses. The thing is you have to stick to the plan. Discipline is key in this. And it's the only way to longevity when trading in a market that's obviously so volatile. So what we're looking at here is we popped up, we had our volume, broke levels, tested. Now this, again, this is the area I would be buying. So if we were then acquiring shares in here and we started buying here and then we saw this break of this previous candle and a bullish engulfing candle, so we started buying more, adding to our position, which is an aggressive move. But once you get comfortable, this is something you can start doing. Once you break that, you can add to your position. And then, so if we're in our position full, say the break of there, the break of this high, this last candle high, then all of a sudden we sold into profit. We could sell at this first one here. That's a 13% profit, 20 cents per share. So this is our first target using a heavier weighted support and resistance levels as our exit. So we'd shave our position here. This would be our profit margin or our goal. Or maybe you're a little bit more conservative and you're using maybe the previous highs right here as your profit target. So maybe you're getting a quick 10-cent scalp out of it. You're getting a 6.5% return within 5 minutes of your entry. So it's a really fast scalp. And then maybe you could shave your position here and leave yourself a lottery just in case it continues higher than its previous highs. In this case, it did return higher than its previous highs. It broke that level, went all the way up to here. We got a 42% return there, and all the way over here is a 48% return. So you can see how entering on this break here, on this bullish engulfing candle, using the 9 EMA as our entry area, using the 20 EMA as our stop loss level, is just a really great trade. It worked out to be a really great trade. So if we were to start entering on this line here, which is around that purple line, and use that yellow line as our stop loss, again, it's a 10-cent stop loss, okay? So this is a 1-to-1 risk to reward, which is not huge. So you're buying here, putting a 10-cent stop loss on it, saying, you know what, I'm willing to risk 10 cents on this trade, but if it goes up 10 cents, I'm shaving the position, which is right here at these highs. And actually, if we entered on that line or on that support, then getting up to here, you're already up 18 cents. So to get back to those previous highs, you'd get an 18% gain. So if you were entering here with a 10-cent stop loss and an 18-cent gain, you're actually looking at a higher risk to reward ratio than a 1-to-1. So it's in your favor. So again, it's just a great idea of trading with a plan. So this is the plan of, okay, we had breaking news, we had volume pouring into the stock. We obviously had price action. We had these large candles and large engulfing candles. We had price action, we had volume, and we had it responding and respecting a key level of the 9 EMA entry. It then bounced off the 9 EMA entry and bounced all the way back up to highs. Meanwhile, it never tested this 20 EMA stop loss level until right here. So if you held all the way through, if you were buying on, say, even this break of highs after the 9 EMA test, I know a lot of people like to buy it like that, and that's fine too. That's a little bit safer, a more confirmed entry rather than being too aggressive. You're waiting more for the confirmation. If you were to do that and you sold at the break of right here, then of this yellow 20 EMA, you're still in a 35% trade. You still make 55 cents per share. And this is meanwhile when the entire, this is all happening while the entire SPY is tanking. The entire market, the SPY, the Dow, NASDAQ, everything is tanking. Everyone's scratching their heads and they're wondering what is going on with the market. And then the problem with the market is it's full of rational thinkers. And the problem is the market is irrational. It's going to do what it wants to do. And I never question it. I don't often question it anymore. And it's funny because I didn't notice that the SPY was even tanking until late in the day because it wasn't, I'm just mostly just a day trader. I'll maybe take a swing trade here and there, but I didn't notice that it was even tanking until about 3:45 in the afternoon when someone in my Discord had mentioned it. And, and I pulled it up and saw just what was happening to the whole market. And, during the whole market tanking, there's still these opportunities. And this stock here, it gapped up all the way from down here to up there. This right here, this is a 126% return, 125% gap. In a market where there's so many people struggling to make profit, when there is a stock right in front of us, right under our nose, making 125% return. And a lot of people will wonder and they'll say, well, maybe the news wasn't that impressionable. Maybe the it didn't look that good, or maybe the chart wasn't that great on the daily or whatever. The thing is about stocks like this is this was a 4 million share float. It had the news, so it had news. It had a tiny 4 million share float. It had volume coming in. If you remember on Friday morning, pre-market, there was nothing else going on. It was just a very slow pre-market, and it has been a slow pre-market this past week. So we're just waiting, and there's so many people just waiting for opportunity. And in this case, this is exactly it. So this is when luck is luck. This is when preparation meets opportunity. We were prepared for this 9 EMA entry. It came back. We were aggressive. We entered. We sold into profits. We sold into these levels of resistance where we thought maybe there'd be some resistance. And there's nothing wrong. Just because it smashed through those levels, you don't have to feel bad about selling here. You don't have to feel bad about selling here. And you don't have to feel bad about selling here. And the reason for that is because you never have to feel bad about making money. When you're making money and you take a look at the whole market and it's in complete red, and there's just people making losses everywhere, and everyone you talk to, every investor that used to be an investor is just tanking right now, keep this in mind. Remember that when you take these gains, and don't feel bad about your gains. Remember, there's someone out there right now struggling to even find opportunity, and the opportunity is right here in front of us, and this is a great example. So that's just two examples. You had a 1 minute chart here where you can see the 9 EMA pullbacks on the breaking news, but if you weren't able to play or trade during the pre-market or these hours, and maybe you're available later in the day, switch over to the 5 minute chart. And you don't have to switch to a 5 minute chart, but it's easy to see on this chart what happened. And you can just see this right here. It came down here. You see this little green arrow. That means that if I double click on here, the RSI started to be oversold. So we became in an area of value on the RSI. So we are seeing that, and what's these arrows are seeing that. And then we can see that we bounced off and then made a bullish engulfing candle here. And that's price action. That's candle indication. So this is indication of a trend reversal based on candlestick patterns. Okay, so this is using simple candlestick patterns, then combined with the RSI, also combined with the later or wider time frames support and resistance. So guys, that's the bulk of my strategy on ticker VLON on Friday's trading. I basically used that 9 EMA pullback after a 1-minute spike. It came back, pulled back, used it as my entry, using the 20 EMA as a stop level. Now, I don't always use the 9 EMA. Sometimes I'll use the 20 EMA as my stop, or at my entry using the 50 EMA as my stop loss. So it can get a little confusing, but if you stay to the end of the video, guys, I really appreciate it. Make sure you smash that thumbs up. And anyone who's not in the Discord now, make sure you like, subscribe, and leave a comment down below. And at the end of the month, I'm going to throw all the names into a raffle. And then what I'm going to do is just pull out a name, and we're going to have one member have a month of free Discord. So you get to have access to my day trading scanner. You're going to have access to my day trading chat room, and also our swing trade chat room as well. So if you'd like to take part in that, all you have to do is like, subscribe, and leave a comment. Guys, I appreciate your time, and I'll see you in the next video. Thank you.